have two sides of a leg in a move, right? Like you've got strength versus greed. The backside of the leg, I don't know why these triangles do this, but the backside of the leg is always going to be the stronger part of the leg. The front side of
Okay, immediately I have a comment to make here. When I say strong, when I say strong and greedy, I think there's an interesting distinction that's to be had. When you have valleys in the market, there's always a range in which they represent. So this is getting into a little bit of range work, but that's okay. There's always a little bit of a range that they represent, and they have kind of their own perspective range. And this range, for example, we have a daily backside, daily front side. So you have two parts of a range, right? You have bodies and wicks, wick here, body here. So we could just mark them all, actually. We can just mark them all. You have different points, and you would even go further into this and have a ladder point, which we won't discuss today, but a ladder point means something different, which you can just simply mark right there. This all represents one range. So when you take this out of the equation, you can see that you can have a multitude of levels representing in one range. Now, when you take the very backside of a move, which is your backside hold level, and the front side of a move, which is the body of the actual move, it's all the same test of the same range. So I guess you could think of this as like an area of interest if you wanted to put an easy term on it, an area of interest. Regardless of where something tests, it has indeed tested that range. So when you talk about testing a backside being a strong level and a front side being a greedy level, it's very important to understand that the distinction that lies there is that if you test a backside level, realize it's the same test as this front side level. It's all within the same range. So it is testing this regardless. What makes a backside so important? It's almost like, think of this, a backside gets hit, it's testing the range, it's going to have a strong reaction. Now, the reason why we say it's a strong reaction, because if it is going to hold the entire range, it is going to create a strong enough reaction that people realize there may not be another chance to get into this move. So when you have a strong level get hit, such as a backside, it is still independently testing the entire range. Now, imagine you go and you test this, and then you test that, and you test this, right? Imagine you go and test multiple parts of this move. Imagine you go and you test the backside first, it doesn't do anything. You test the front side. That is going to tell you something very different with trend work that needs to be done in the future versus hitting the range and completely collapsing off of it, which should be a very clear indication of what's happening next. This is all representing the same test. So just a little pre-context to the, and okay, we'll leave it like that. Just a little pre-context to the beginning of this lesson of data and levels.
the leg is always going to be the greedier part of the leg. Okay. So when you have strength versus greed, when you have these backsides of the leg, you have larger reactions because they're stronger pieces of the move that's holding. For example, like this would represent this moment in time is right here, right? You've got a larger piece of the move than if this was getting hit right here. You have a smaller piece of time in space, right? So you actually have a smaller piece of time. So vertically, you have a larger range up and down, right? Like vertically, your range that you're protecting is much larger. You know, the spread of price would be all the way from 6,000 to 3,000, right? So you have vertically a large spread of price that you're protecting. Horizontally, you have a large amount of time that you have developed, as opposed to this level here, which is greed, right? This level here is going to be a smaller price that it's holding versus a shorter period of time. So this is kind of how it always works with backsides versus the front sides of legs, right? Because of the nature of how they are created. So let's do this. We're gonna, I think I can move these. Yes, I can. So when you have these backside of the legs, you can expect larger bounces from them because they are representing a bigger part of the charts. So like if you were to simply just do the very basic TA here that we do, and you marked the weekly, and then let's go and mark the daily, which would be right here. Come on, right to the yes, right there. Perfect. You mark the weekly and the daily, and you have reactions appropriate to those. Like you hit the weekly here, you're going to have a decent sized bounce. Like you've got a 20% bounce here, 18, or I guess it would be magnet tool always messes us up. Almost 21% here, right? Like 20, we'll just call it 20. You have 20% off the backside of a leg. You hit the next level, you have the very much the same thing. You have an even larger.
Okay, I want to give you guys a scenario. Imagine you are in this moment right now and you test this level and start moving off of it. Imagine in this moment, you've tested the entirety of the range, which represents every level. That's why the reactions are so strong, because when these backside levels hold a price down, imagine a compounding of, say, shorts coming in. You have a short from this level, you have a short from this level, you have shorts from this level. Imagine a compounding of shorts as if you've tested this range. You can't say that every level is tested, but if the range holds, it means the entire range is holding the move. So all the shorts that may have been waiting here might get in the trade. Everything waiting here, all the in-between moments, all the good traders who realize that, hey, this is the range that can potentially hold us down because this was the weekly rejection off of this point here, which gives you your laddering points here in the move to create trends and all these other things. Imagine you hit a backside and it holds the move down. That's why you get such a strong reaction, because in one moment you are testing the entire range, which could represent every single level. Now, that doesn't mean that you can't break back above this and go test that level once again to see if it's still going to ladder off this move. However, in this moment, that's why you see such strong reactions to backside hold levels.
Larger reaction. When you start going after the front sides of these legs, they are moves of strength, of greed, not strength. And the reason why I call them strength versus greed, because these will have strong bounces that makes them very strong levels. They are very strong reactions. They are very parts of the chart that are holding up the strength of the entirety of the chart. Like it's basically holding up the entire bottom of the chart, right? When you hit a level like this, you need to break it over time. So right now, if we were to take these off, the difference here is this is greedy. This is going to be the greediest price in the move. And even greedier would be, a price down here would be even greedier than this piece here. You see, you need to hold them over longer periods of time. Like they're not moments where you have an instant bounce. And here, so fine, you're going to have a bounce on day one, but you're not going to bounce off this and rip up to some kind of crazy levels up here. It's just not realistic. What you are going to do is you are going to use them to hold through time to go and try to break their moves. And it's going to be greediest point. And that's why I call these greedy levels and I call these strong levels, because these are going to have strong bounces because of what they represent on the charts, as to where these are going to have greedy responses. People are going to go after them. And if they hold for long enough, it's going to be the best price before you actually have the break of a move, just like it would have been right.
So I think that's another good point to touch on, is that when you do have these backside holds holding a move like this, so you have a couple different outcomes that you can presume to be true. The backside holds of the move, it creates a strong reaction because in one essence, the entirety of the range is tested. Okay, if that doesn't happen, go back to this moment. If that doesn't happen, you have your little move off. You go up to this part of the move. Well, the range is being tested multiple times already. So this range has now been tested once. It's being tested possibly twice, 3 times, and it needs to see if it can continue to hold its range and create some kind of exterior laddering. Oh, I shouldn't say exterior to this overall range. So exterior to this moment, interior inside of the range, that would therefore create something like this, right? Some type of laddering like this where the move can hold.
Here, right? Like you have the
Seabass asks, can we say that a strong level backside bounce will reduce the probability of deeper levels holding? It will reduce the probability of it going after deeper levels. Once this range has been hit and held, it reduces the probability that you are going into these areas. It reduces it because it increases the chance that this is just going to hold the move, because this can create events thereafter. So what I mean by that is you can hit this and it can create a ladder off of that to create hold level, ladder, ladder, ladder. So it will reduce the probability of anything beyond this being hit and increase the probability that the entire range will hold the move to confirm the exterior trend ladder down.
The greediest parts of moves, right? So you're going to start to break some of
You're
these
welcome,
trend
Seabass.
cycles like this, like you have this one here to here. You're going to break this trend cycle and it's going to create the same thing, the origin. But you notice how there's not a crazy bounce, right? Like you're going to create whatever origin is in here, whatever origin you made. I believe it's right around that price there. And it's going to cycle through the move, but it's off of a greedy point, right? Like it's off of the front side of the leg. It's not off the back side, which was here. If it was off the back side of the leg, yeah, okay, you're going to have a larger bounce. If it's off the front side of the leg, which is, even in this case, I believe it was just actually it hit trend. It didn't even hit the backside of the leg. It hit trend. Yeah, because trend is created right here to here, right? So it actually hits trend here. You're going to have, a greedy part of this move, and it's going to hold through trends. We can put this to here, and we can even put this to here, which was the current part of the move. Come on. Yeah, like any hold level is going to give you a reaction. Like look at today, right? But again, also look at how much we lost to get to this point. Like we're up, 7% right now. But like look at how much we lost over the course of the past few weeks. We've lost 40% of price over right. Not even the past few. We're actually only talking about 1 week of action. We've lost 40% of price. So yeah, are we going to have a 10% bounce? Sure. But if this was catching the backside of the leg, it probably would have been like a 30-40% bounce. It would have been something like this. It would have been something where you catch a backside of the leg and you just go straight up, right? Like this, it would have been exactly that. And I believe that actually caught this level right here, which is the backside of a leg, an untested backside of the leg. So it catches this level and then it has a 40% reaction up. This is the difference because it's in time and space, it's holding larger pieces of the move. So these backsides of the legs are points of strength, which will hold up the larger hemisphere of the move that's vertically and horizontally representing a larger part of your charts, right? The front sides are giving you points where it's a payoff. It's going to be the best price if it holds. So that's why I call them greedy, because you're going after the greediest price. Because if it holds, the greediest price is going to hold, and it's going to hold like this until it gets to that point, and then it will, that's where you would buy, just like right here, and then it takes a large traverse up, right? The difference between strength and greed: strength will give you instant money. Greed will give you the most amount of money, but only if it's played right. You see what I mean?
So we need to talk about that statement for a second. Strength in a move. Let's listen to that for one more time.
It will, that's where you would buy, just like right here, and then it takes a large traverse up, right? The difference between strength and greed: strength will give you instant money. Greed will give you the most amount of money.
Okay, the reason why this is true as to where strong will give you instant money, right, versus greed that gives you the most amount of money is because a range is measured against the next. So I'm going forward in content a little bit, which is okay. That's perfectly fine. A level is measured against, think of a Pandora's box. It's measured against the level that it's being engineered to go after. In this scenario, I would look at this and say, okay, this is the instant money that could potentially go here versus this level having to be held, which is the amount that can go for here. Quite simply, backsides and front sides share the same targets that they go after. So if this event, whichever one hits, decides to be true, they will have the same interior target, which will be represented on the interior range that creates a Pandora's box. In this case, it's a trend, versus their exterior range, which is onset by larger information from this point to this point. So that's important to understand. They will have the same target regardless of which one is hit. So when a greedy level gets held, it will have the most amount of money in a trade. And that's important because when you're talking about this being hit, if this has already been attacked or hit or whatever you want to call it, and then it goes after the greedy point, it alters the range. As this is already tested, it's going to alter the range into ladder points. So now instead of it being a trend, perhaps it could be like this. Perhaps it could be here. Perhaps it could be a ladder point here. So it alters the course of which level is going to get hit, regardless of it being a front side or backside, they will have the same target.
But only if it's played right. You see what I mean? Strength can give you a lot of money all the time because there's strong reactions off big levels, backsides of the legs, untested levels, this and that. All the
secret sauce here, the secret information, is understanding where the range is, right? Imagine, let's dumb it down for a second. Okay, imagine, it's going to go to some kind of random spot here. Okay. Imagine you have a target here, right? And a target, well, maybe a down contract isn't the best to do this on. Let's just go to, like, I don't know, Ethereum. Sure, why not? Let's go to ETH USDT. That sounds perfectly good. Yeah, ETH USDT. I'm not sure what this chart is. It's probably as old as bones. We're just going to delete it. Okay. Although this would be a replica of Bitcoin's chart, it's perfectly fine. Imagine you have a trend like yay, right? That should be good right here. Distribution to distribution, holds the move up, breaks it, good. Something more interior, maybe larger time frame. Let's double check. Okay. You've got this here, which cannot be onset by the 4, but it could be onset by the 1, which is right there. So this can be the 1 hour trend. So imagine you're in this move, right? You've just, okay, let's put the replayer tool on. Imagine you're in this move. You've just hit the bottom, okay? Well, let's go back even further. Imagine you've just hit the bottom, okay? Your range is now like this. You've created your trend on the hourly to the hourly. Your range now becomes the backside, front side combination. So you've got backside here, front side here, with a possibility of a level here. So you've got backside, front side combination with a possibility there. This becomes your range, not the levels, because this represents, almost in the same way that this trend would represent a backside or a front side as the greediest point with the strongest reaction, it represents the same thing. So they have the same targets. You hit your target here. It ladders the move. So this is important to realize. It ladders the move. Its target will be trend. If trend can't hold, the move is broken. It has now created this as well, which is tested to here. And the move goes up and over. I wonder if there's any little stop off there. No, it actually just breaks right over that, which is fine. Okay. It was actually already tested right there. That's what it tested. So that's fine. Backside 5 minute. Same as a 15-minute front side. Take all the noise off the chart. You can see the 2 tests. So the key piece of information here isn't about marking the levels. It's about the realization that a level can attack a range and vice versa. Backside, front sides can attack their respective ranges that represent the strongest or greediest points in a move. So if you were to go back to a Bitcoin chart and say that, where did we leave this off? Do we have the replayer tool on? Oh, right, we're on the daily. So if you were to say backside being hit will target this trend, you would be inaccurate. You would say the backside would attack the greediest part of the range because it's the strongest component of that part of the move, as to where the greediest piece of the move will attack the range, which is the trend, which is the strongest piece of this right here. So if this indeed gets hit and pulls the move down, you would very much expect to try to hold the ladder point. So you'd very much expect this target if that backside gets hit, because this being the strongest target on one side will go after the strongest target on the other side. However, keep that range, attack this level, you very much expect to go after trend, as this is the greediest part of this. This is the strongest part of that. That's something I never explained in these lessons, which is like invaluable because it helps put the pieces of data points together to understand what the thereafter target is. So once you attack this, what's the logical thereafter target? Once you attack this, what's the logical thereafter target?
This information that we've looked at, even in here, even as we looked in here and saw these bounces here, it was the same thing, strength versus greed. If the greedy level, which is the best price, is hit, it has to hold. That's the difference. And so that's what we see in.
Maybe I need to catch up on chat. Seems like you guys have a few questions about this. How do we define one test of a range? Any time frame can hit it. Any time frame in time. In 1 second intervals, how you can define the range as being tested, a 1 second interval. The second it hits, that second it's tested. Largest time frames represent most important moments. Smallest time frames represent polarity, which is something we'll get into in the future. Backsides are difficult for me since my failing trade exit points and initial stop is a bit unclear versus greedy levels. How do you trade 100x on backsides? Trade the stronger levels. Stronger levels have a higher chance of holding. Like in this scenario where you had a weekly touch and it created a daily backside, it would have a stronger chance of holding than a 4-hour. Strong targets greedy. Greedy targets strength. Exactly, Starlight. So targets not the same after all. Stronger one has a lower target, maybe. Can you confirm? Just said both things from what I heard. Oh, maybe I'm misreading this. So target's not the same after all. Stronger. I think, okay, so I'll explain it again. A stronger level will go after the stronger target. So I think that's where the confusion lies. This is a stronger target because it represents a bigger part of the range, the stronger part of this range. This would be considered a weaker target. This moment here, when this gets hit, this is considered a relatively weak target comparative to the strength of this. This, in that same instance, is now considered a strong target when this is hit, as this is the weaker target. So as this becomes a weaker target, this increases in strength. As this is a stronger target, this decreases in strength. Does that make sense? So comparatively, it's about which level in representation to the level that's hit dictates the strength of the next moment. Strong level goes after a strong target. Weak level goes after a strong target. Strong level, this is a weak target upon this being confirmed as yes. This becomes a weak level when this is true. When this is true, this becomes a strong level. When this is true, this is a weak level, this becomes its target. So it's not about static information, and that's where people get it wrong. It's not about saying, oh, this trend line is weak or strong. No, it can be both. This or this dictates that, not these data points that it gets created on.
All coin in everything. Like we see that in all stocks, we see hold levels get hit over time, right? You see hold levels get hit and they create an accumulation cycle and then they move up when they break trend. Like this is what we always see, right? Like
I see a lot of typing. I think I should pause the video and wait for people to finish their typing. I think because we're just going to keep pausing and going back to it. I'll wait for a few comments to go through. Your video froze literally the second. Oh no. Okay. Let's do a more simplified version. Let me pull it back to the base meaning first. Okay. Let's talk about butterfly effect. Butterfly effect is comparative analysis. We use the events on the charts as these moments don't exist yet. So right now, this doesn't exist as a test. This doesn't exist as a test, which means this can't have a defined strength. Everything in our charts are data points that communicate what could be possible future events. Okay. This is why I call it comparative analysis, because we have to compare the moments that are happening and the data that they represent in order to make sense of the next moment. So you're comparing different sets of data to understand what's going to happen in the future. So in this moment, we don't know the strength of this trend. But what we do know is that if this level, which represents strength or the backside, the strong reaction, if we understand that that is representing this range off of this, just say WT, weekly test here, creates this, call this an IR, interior range. So this interior range right here is created off this weekly test right here, right? We know that there's going to be 2 moments, possibly 3. We know there's going to be a range test. Let's put it that way. We know that there is going to be a range test here. That's what we know is true. If that fails to be true, it means this whole bottom side will collapse. That's not what's important here. What's important here is understanding that this represents a strong part of this range. Therefore, it's a backside, a strong level. If this ends up being true, it means that this will diminish in strength because it's the most interior piece of the range. So if you had to define I and E, interior and exterior, as dictators on the charts of data points, interior moments would represent the smallest pieces, meaning that the interior moments would have the lowest reactions. Exterior moments would represent the greediest parts on charts, therefore having the strongest reactions. Let's think of chemistry. So if this, which is the strongest part of this range, ends up being true, we now understand that this trend has lost strength. If this is not true, we understand that this has gained strength. So we have to compare the data points and what they communicate in those moments to dictate these future events, to decide if this is true. We will go down to the strong moment down here to try to counteract that same strength. Almost like rolling 2 marbles at each other. You would be best off using a marble of equal size if you wanted each marble to have a fighting chance. Well, it would be the same thing. This is a big goddamn marble. It represents the strongest part of this range. Therefore, I just picked up a goddamn 5-pound ball bearing. Might as well be a bowling ball. Well, you better use an equal size bowling ball in order to stop that, right? So almost think of chemistry and reactions to actions. Data points in comparative analysis is very much the same thing. Okay, I'm going to let you guys type because I have no clue who intakes what here with that. I think that makes it clear, though. I think that should allow everybody to understand. The only thing to add to that is interior moments are always the smallest moments on charts, and exterior moments are always the strongest part of charts. Correct. Correct, Scarpy. The moment you enter the range, no matter what levels, the range becomes tested. This is 100% true. This should clear up a lot of moments for people, because this is one thing I never, and by choice, never went too far in depth in butterfly, because it would almost take people going through butterfly at a pretty high level and grasping a certain amount of knowledge. Like if I started off butterfly effect like this, people would be like, what the hell are you talking about? Where are these trends coming from? Why do you have floating levels down here? Well, they're ladder points. What are you marking these ranges for? I have no idea. Like you could never explain this to somebody as an introduction lesson. This is recap mentorship once people understand the larger components of the chart, to see these more finite details or these more specific details that allow us to further understand why data points and how they work are so important, and why the communication layer in charting gives us your future moments. It's not about static information. So I always get asked that question. Well, how do I mark this? And what do I do in scenario X? I couldn't possibly tell you because scenario X hasn't happened yet. You see what I mean? So there's kind of a balance there between it's already happened in the past, so why are you asking about what happened here? You can easily find that information out, versus, well, I don't know if you should do this level or this level because those events haven't happened yet. I mean, there's a common sense of which ones are going to happen. All we know is what like one move at a time is like one of my famous saying. One move at a time. That's all we can see. One move at a time, because the variables have not been created yet thereafter to understand the strength of the next part of the move and what is relevant on the other side of the chart. If this gets hit and holds back, the entire architecture of this changes. There's a different outcome if this gets hit and moves up. Even if it's slightly, this architecture is a completely different path.
Just go to one random coin that I did recently, and it was like, yeah, well, look at the accumulation cycle on this thing. Of course, this thing moved up to 800 sats when we were here. It hit its hold level. This is the same thing across all stocks. It doesn't matter what stock you're in, right? You hit your hold level, which is the greedy level right here. You didn't hold the backside of the leg, which was here. So this is the backside of the leg right here. I suppose it's an origin level right here. That's fine. This is still the backside. This is all the backside. It's just on a different time. And it hits the backside and has an instant 3-day bounce, right? So, strength versus hitting a hold level and then trying to break trends and having a larger reaction. You see what I mean? Let's measure this, strength, and a few days later, and 30, 40%, whatever.
Let's use the example I used here. Strong hold level, large bounce represents the entirety of the range happening. Greedy hold level has a large breakout when weaker moments, which are supposed to be stronger, hold the move. So in this moment, right, I'll try to trail this with my mouse so you guys can see. So I'll start here in the blank space. In this moment, you hit the backside. It gives you what we would expect to be a strong reaction to go after an exterior moment. It does. It goes after these exterior trends. That is the expected result. Strength after strength. Strength holds down strength. So hopefully people follow that so far. So you have a strong moment relevant to this tiny interior piece. Gets hit, and it's not going to stop at these interior moments right here, because these would be the interior moments to this. Instead, it goes after its strong level, bowling ball versus bowling ball kind of thing. Expected result, bowling ball, falls down. Goes after the greedy level, right? Which in theory should break because of the strength of this exterior trend. Breaks that, ladders, and breaks the next one, therefore garnishing an extremely large reaction. See how that works? Because this backside was tested and it failed. That was the expected result. The expected result fails. It goes after trends that should in theory break it down. They don't. They are the stronger parts of the move that are being offset by the weaker parts of this range, therefore acting in polar opposite of what the expectation is.
You hit a greedy level, which is going to be the best price, which is the front side of a leg right here, and you hit the best price and you hold it, and it starts to break all of its trend.
Oh, and somebody asked, when does a trend become weaker? Trends become weaker when the opposing points hold through. So a weak trend becomes weaker or stronger depending on the range that it hits and what part of that range it hits. So trend strength is dictated by ranges.
Trends and levels, and so then it has its move, and from the hold to here, you have 200%, because it's going to be a bigger move, but it's harder to develop the move because it has to trend, it has to accumulation cycle, it has to break trends, it has to continuously hold its move, so it has to find a base and create all these things, right? Like it had to have done this, it had to create this to this right here, which actually breaks down to here, and then this one to from here to here had to hold. So it has to create all these other data points associated with it, right? Like it had to create this right here like this, and hold this part of the move, right? So it had to create this, hold that, break the local origins, break all of its cycles, and then once it's done all that, it's just clear to fly out of its mind, and then it's just 2 straight days of upwards movement and 170% later. And but that's the difference between a greedy level, which is the front side of a leg. It takes time to manifest, so you're faced with the decision to either buy the best price and hold it if it is going to continue to hold, or you could just maybe cut some time out and buy the hold level. So there's they're gonna make this a different color because we can't even see what's going on anymore. This green and kind of a little thicker maybe. So you have a hold level there, and it hits its hold level once, twice, almost 3 times, and holds the level, and holds its price, and distribution to distribution candle right here, and then you would have it another one right here, this right there. You have trend against the hold level, but you have to say, okay, I'm willing to buy this low price and I have to sit in this thing and wait, because it could just simply hit an inverse and fail down, right? Like it could have simply just got to this moment right here, could have just got to this moment and pulled straight back. And it did. The only difference is that then fine, it probably held this right here. And it did. So it hit its inverse, pulled back to its leg, and still cycled up. That's the difference though, because these backside holds are knife catches, right? Like this is a knife catch. This is hold the move because it's greed. It's the greediest price, but it's going to take a substantial amount of more time and break all its levels to move up, right? So big difference. So when you look at BQX and you see this, and it's like, oh, we just hit a trend. We just hit a hold level and it held really well. And oh crap, we're coming to all of these trends that are creating a cycle. And oh, we hit the inverse level, but then we all actually held the move to Pandora's box to go up and break the leg of the move right here. So that's like kind of like you can see what's happening in the move, right? So strength versus greed is understanding that the backside of hold levels, the backsides of legs versus the front sides of legs, they have a different meaning. So we have to treat them differently as to what we expect in these moves, right? We have to treat them differently. Look at this. It didn't quite make it. It actually didn't make it to this, but it didn't make it to the more important level, which is up here, the 15-minute. We're going to see it's continuing its uptrend. We're going to see, but what we don't want to see is this get broken. We definitely don't want to see this get broken. The hold levels of the move will protect that from being broken. Like this will protect it from being broken. This over time can't.
So here would be a good example. You have an interior trend. This trend gains strength once this level is hit. That would be a good example. This trend is therefore weaker until this moment exists where it gets hit.
Like if it just kind of goes like this and then it goes here, like obviously this can't protect the trend because your time has run out. It could protect the trend right now if it went straight down, or even if it went to this moment here, running the risk of losing the move, right? Data will show you what's happening, right? So like right now we are attempting to hold this, and hopefully this is going to keep cycling up here. Even right now you'd have something very interior like this that will try to attempt to hit this again, but really we need to create this origin level. Like we need to create an origin level here. We created a little tiny valley right here. It's not enough. It's just all rejection candles, right? You have to go after at a minimum this, which is actually also rejecting off of this. So we have no hourly candles. We have to go after that. Even I'd feel safe if it went here, then I would feel pretty confident. But okay, fine. This is a good start. This 15-minute level, because this actually this isn't a valley. It's just an inverse level, right? Like this is just, I believe it was just an inverse level off of right here or something, right? Like the 1 minute candles, I believe there's a little valley here. Yeah, it inversed off this little valley protecting the move, which it should. Like that's where I would have exited my trade too. It'd be crazy not to catch this level at 6:45 in the morning. By 7:30, you brew a cup of coffee and you just made 900%. Like I said, you'd be crazy not to. So it's not like this is showing you failure, but this is kind of just showing you like, yeah, okay, we got to get the hell out of this move. Brew a cup of coffee and you're up like 15 grand. It's like, oh, okay. So people are going to exit here, but that doesn't mean the move is broken. We have to see the other data points to see where this move is going to try to manifest and hold. We're not there yet. We haven't created an origin. We haven't created the data to communicate to us that we are trying to create an accumulation cycle. So interesting, because we kind of talk about accumulation cycles, some pretty basic FOT stuff, but now you're seeing how they get developed with data points and what it represents. And when you can start to make your own assessments and say, oh, this is breaking up, or oh, this is breaking down. Why is it moving up? Why is it moving down? Right? Because this was just nothing but a failed cycle in here. So we already broke this down and you can see the failed cycle. And now you're almost seeing the same thing get recreated again. So if we fail our cycle again, guess where we're going? It's not time to long yet, boys. Let's create an accumulation cycle and wait for the right trend break to get in. And then we can make tons of money because we're at a greedy level right now. So there's no rush. You can go and scalp all you want. You can, like I was scalping Link this morning and doing those things. And you took a couple really nice trades on Link, and that's all fine and dandy. For now, like let's not be going too crazy, because what might look like the bottom is still not confirmed any kind of cycling or anything yet. What was 10% here is probably like 8% here, which is probably 6% here, because it's Pandora's boxing, right? So you're shortening that funnel, the entire time, and so now your tops and bottoms are they might still be pretty good. They might be 4% or something, but given the size of this move, like here they're 4 or 5%, back here was probably like 13 or something, 16, 17%. Jesus, this wasn't trend. When trend gets touched here, this was perfect entry at 9,200, or even looking locally. If we create these trends here, even like, let's maybe not do it on a 3-minute candle. Let's do it on a different time frame. Even locally, like every single time this trend touched, it rejected. Trend is there to move you down. If you tried to buy every single trend break, you'd go broke, because 19 out of 20 trends are rejecting. Like here's the point of trend accumulation right here. Oops, let's move that candle properly here. Accumulation here, or you could even go right here. That's fine. It's just a little bit of a sharper trend. It's the same trend, but accumulation is going to give you a little bit more of a relevant break. Not important for today's lesson. You could have entered it here, that's where it gets created. So you don't worry about it here. But then there's 1, 2, 3, 4, 5, 6, 7. Tries to break still 8, 9, and then it goes over, and then it still fails. Trend is there to support the direction of the price. If you were to buy every single trend break, like this is how people trade, they try to buy trend breaks, you're going to go broke. Trends are there to make you fail moves. They are not there to try to break. People playing trend breaks are losing traders. They will lose money like constantly over time. Oh yeah, short trend, it's your best entry. Trend is always your best entry. Trend is like, oh yeah, man, best entry. Like look, even here, trend that gets created, best entry. Hello, like this is a really good entry here. You see trend is getting respected. It's not breaking. Hey, guess where we're going? We're going down. When we come up to this trend again, we're not going through it. I can promise you that. If you come to this trend, you better be watching and being ready to click that short button, because it's time to get some juice on this. Like it's going to reject. The trends reject. That's what they do over time. Like 19 out of 20 times, trend rejects. If you had a bot that was programmed to trade trends, and all you ever did was tell it to trade $100 on the touch of every trend, it would have 19 out of 20 successful trades all day long, or 9 out of 10. You know what I mean? So like, oh yeah, man, trends are beautiful, beautiful, beautiful things.
Okay, and I'll let you guys take your break. Wow, look at that scribble mess. Let's delete these brush strokes. Let's get this thing cleaned up for the next part of this. Get this cleaned up. I just want people to have a chance to ask questions if they have any. So I'm kind of sitting here. 6th time was a charm. So I guess in a live trade situation, you put different entries, the wick and base. This is a really great question, and one I'm going to take some time on, actually. Talk about how I handle trades when I'm in trades. I'm going to go through kind of like a mock trade, as if I were trading these levels in this range, which is what I'm looking to do anyways when the next trades execute. And people are thumbing up this, so that's good. Okay, and then so I'm going to read this out first. So I guess in a live trade situation, you put different entries, the wick and the base of the strong level, and then the wick and base of the greedy level, to see how the move develops or how you manage it. Okay, so this is how I do it. A little stroll down secret sauce lane here. I mark out every single. Okay, pay attention, because well, now you guys probably are already trading like this. Hopefully I've trained you really well, and you guys are already kind of doing something similar, but this is how I would do it anyways. I would mark this level here because I know it's a backside. So I have like a marking hierarchy. Thickness means something to me. So I would just go to a thin line here. And then I would, well, okay, that's wrong. It would start as a thin line and I would move it over to a thick line, because what I want to know is that this is a moment of importance. And the thicker the line I do is like kind of deems its importance to me. It's just visual communication, visual. It has no impact on the charts, just the ways in which my brain processes information when I do this. Because sometimes I have like 15 levels marked between this and this, and I need to kind of understand, okay, this is a strong level. I've marked it thick because it's being onset by a weekly event. So to me, the backside daily would be the most important moment on this chart. So I do have a thicker line here for this, just to dictate, and that is because the superior moment, or the moment that happens first, not the predecessing moment, but the moment that happens before it, the moment that creates this, was a weekly level. And then if we were to go to the weekly levels, I would say, okay, well, there's only one untested weekly level, which is the same scenario we're in right now with the daily range. And you could even get into the scenario where you're saying, okay, we've got a weekly hold level here, which is fine, and it's going to be inside the weekly hold level, and it goes blah, blah, blah. So you could even mark this one here as maybe a first routine routine set of trades, and I would see it's purple. It's a solid line, so it doesn't dictate a backside. It represents a front side. It doesn't really have a two candle range, so there's no backside to mark, which already tells me that it just in its normal essence of itself, it is a weaker backside, not a backside, sorry, a weaker weekly level than something like this backside, front side, complete range could be. Now, with that said, I understand that this is a pretty goddamn important level, which creates a couple levels in here that are important. So that's the first thing I would do, okay? I would dictate kind of the parameters of what this thing looks like to me. And then I would say, okay, this is the strongest time frame backside, so I need to make it a thicker line. And in this case, I don't think I would go as extreme as 4. To me, a 4 thickness is kind of like, okay, sound the alarms, take the short, like we gotta at least attempt this no matter what. I would then go and I would mark this right here to identify the top of the move. Okay, and I would go like this, and I would just make it solid, because I know solid lines for me are hold levels, relatively weak because it's not a strong moment. I would then go and mark what could be a ladder point on a deeper time frame, which could create the ladder point here inside of the move. I would make this dotted. I would color code it blue to represent that it's an hourly for me, and I would also understand that this can still represent what would be a ladder point, right? What would be inside of the test of the greediest moment on the chart that could still hold it. So as if this moment happened where you tested the greediest part of the daily range, you went here, and then you didn't hard close and you came back down to here. It's like, okay, obviously this is going to create the ladder here. The ladder here to here, which is a trend, which will create some kind of like move like this, which will even give you your interior trend or whatever. Point being is that we have the daily level that never really hard closes. So I would mark this level, I would mark this level, I would mark that level. To me, those are the 3 standout moments in this trade. The point that represents the most strength, the point that can continue to hold the move, therefore if hard closes don't start developing over top of it, and the greediest point that would then reflect this being tested, also while trying to fail and becoming a ladder point off of this. So you see that all the time in charts where they just go up to some spike level. It's typically hitting a ladder point inside some deeper range, like this right here would be a perfect example. Just go to the first one and mark it. This would be a perfect example. Hey, this could potentially be a ladder point off this. That's the level it's dictated at. This is what needs to not hard close. So then we have kind of a clear path of understanding what our data can represent in these moments. Okay. When this trade is unfolding, what I would do is I would look at the weekly level and I would say, oh, cool, we got a weekly level that's been hit and being held. This is about as clear as day. You can take the 5 minute, you can mark your re-entries. That's about as clear as day. Once this one breaks, then you could go down to here, which is as clear as day. It says right here. Then you could go down to here. This is as clear as day. And that's what's holding the move. So you have a very easy time of spotting what the moves hold. And had you entered this weekly trade, you could easily go to the 5 minute. I know this because I'm just really good at time frames and I'm way too long to dick around and go to a 15 minute or an hourly or 3 minute and find the right time frame. For me, I understand that this is the 5 minute time frame just based on the amount of time that has passed. And then I could see like, hey, if I was in this weekly short, I could just get out of this trade once this starts hard closing the 5 minute charts, which is perfectly fine. It's all the same day that we're representing up here. So the key piece of information is I could exit this trade on the daily as soon as I understood that the daily was closing and this was constantly testing over and over and over daily closes. You get out of the trade, you were entered here short, you get out of the trade once this daily hard close. Very simple queue of logic that can be created. Damn you, Button. You fucked up big time. That was a big, huge explanation. And then the way I would handle this in the moment is I would treat levels like how I treated this weekly. I would treat levels, okay, weekly happened, you saw what I did with 5 minute, get out. Same thing here, daily, backside, get out. Understand the deeper components that control those moments. So like this would have a controller. We get into controllers in the future, very, very much further lessons. This would have its own controller. This would have its own controller. This would have its own controller. 4 independent moments that are represented as one larger moment that can be combined to understand what the strength points of this side of the chart is versed on what's happening at those moments. So that's the way I would chart it, and the way I would trade it is how I showed you what I did on this weekly. I would find the moment that's the controller of the trade while understanding the larger event, and then simply get out of the trade when I see that failure to lock up my profits, walk away and take a safer entry, because above all, you can always find perfect entries. You just have to know like when to get out, because it's very straightforward. We have a weekly here, it's hit. It shows you the 5 minute. That creates such a very basic, simple logic flow that it would almost be hard to not follow. Like mark your 5 minute bodies. Write that down on a paper. Mark the body of candles. This one, okay. Hit. Okay, this is next. This one here. This is the next untested one. Okay, perfect. Okay, cool. Look, is hit. Okay, perfect. No hard closes. Good. And then next one. Oh, okay, hit. Perfect. Good. Boom. Hard. No hard closes. Great. And it can just create the most easy set of like exit strategy. Like you can just, there's nothing there to know. And you could even just go one step further and be like, oh, here's where the trend was created. Aha, easy, very, very good. Oh, okay, you fail this. Okay, you move down. Like very, and you'll never lose money this way. So you can, as long as you understand the larger data points and what these kind of what I call controllers are. And it's all onset by data points. So the stuff we did last week, which was so important, so vitally critical to everything we do in the future. You can just create these moments, right? And they're very, very easy, clean to follow, very straightforward. And it just gives you kind of this impeding freedom on the charts where you know exactly what's going to happen. So you don't have to play that guessing game of, oh, I'm in a short from here. It was the weekly. I don't know what to do. Should I let it hit again? Should I wait to see if it hits? I don't want to get out because maybe it's going to hit, reject, and have a big moment down. And it's like, no. Just look at the larger range. And you just use this as your guiding light. You don't even need to know anything about trading after this. Enter the trade here. Create the logic flow. And exit the trade when it breaks. You don't even need to know anything else about trading. You have to wonder, oh, this level's going to hit. Should I stay in? Should I get out? No, you just get out. You just get out, look for a better opportunity. Very simple. And then if one of these levels went like this, if it went something like this, and I'm like, oh man, I missed my entry. Goddamn front runners. I simply wouldn't go after this level. I would look to see what it's testing and try to catch something up in this range as a short. I would adjust it to here, hoping that it goes after the next level in order to not hard close this. So I would redefine my entry once this moment happens. I'd redefine my entry to this. So prior to a level getting hit, okay, pay attention, write this down. Prior to a level getting hit, I am going after the level, okay, to take my trade. If that level doesn't get hit, so this is prior to the level getting hit, if that level doesn't get hit, I am now adjusting my expectation to hard close this as my next trade entry, which means I will try to enter here in hopes that it comes back down like this. The second it starts hard closing this, you're already short from here. You've now taken the short here. Maybe it goes up here and you come down. It starts hard closing this, creating some kind of like whatever bullshit over here. Hard close, get out, scramble, freaking close out your position. That's the way I handle my trades. And it reduces all risk because you either hit a trade and pull off of it, or you front run a trade and see if it can hard close. Those are kind of the most popular 2Q events that happen. Now, there is a much deeper set of events that happen. These are 2 out of a possible, I would say 15 to 20, as WD knows me and him have done some pretty deep work in charts and in mentorships and things like that. But he can lay claim to that there are many other moments, but this would be a great foundation for traders who don't know all the 20 moments. This would cover and give you about an 80% safety blanket. Say that, okay, if this level doesn't get hit, do not take it. If this level, okay, sorry, let's do that again. If this level hasn't been hit, you can take it. If it doesn't get hit, don't take it. Go up here in hopes that it goes like this and goes below this hard close like that. Same thing that I showed you guys here on the weekly with these 5-minute hard closes. That would be like a great blanket statement that'll give you like an advantage that's so big. It's just like, okay, how can I screw this up? I'll find a way, don't worry. No, not true. You won't find a way, hopefully not. But anyways, that's the point.
At a mute point now.
This is really juicy info. I think as good as the explanation of data points was, when you start building off that, things really start to fire. And yeah, I would agree that this is probably the best one so far. Just not diminishing the other ones, but just because when the knowledge starts to compound and things start to move together, it really does something else quite different.
These ones here, I believe these are no longer relevant, and this one can go. We can kind of just only keep the relevant stuff on our chart, and it's fine. So we learned about hold and break levels in the past, right? So we talked about this very easy range of moves to take here, and we've all looked at this chart flipped upside down like this. So we've all done this, and we've flipped this chart upside down and seen that was the backside of the leg in the future. Get rid of these. Get rid of that one there. And we've all seen these leveled in here and how this is fueling the move in that direction and so forth and so forth. Now we're going to talk about when we had done this prior. We had found all these great levels back here to trade. We found this one here, and then there was this here, and then this down here was never hit, but there was another range in here that was hit somewhere around here. Anyways, it doesn't matter. We found all these different ranges that we were looking at. So what you guys didn't realize you were doing is going after different types of hold levels. So what you guys didn't realize that you were doing was going after what's called front and backside legs. So when we have moves, okay, I'm just going to do this real quick. When we have moves, we always have kind of the front and the backside of a leg, right? Like we always have parts of the move that define the backside and the front side. So we looked at this. We'll move forward a few candles, and that's fine. Maybe we'll just go to the daily here to see kind of what this looks like. So we always looked at what would be the front and back side of these legs, right? So at this point here, you had the front side, and at this point here, you had the back side of the move, right? So this is the front side of the move, and this is the back side of the move. So BS and FS, backside and front side, right? So two different types of hold levels now that we're talking about, no longer just what are the untested hold levels? I mean, we already learned about untested hold levels and how they work and what that means. So when we are actually going and talking about these levels, we have to start defining them in terms of front and back sides of legs, right? So we're going to do this, and we're going to put this as front side. So you can see it here on the right side of the screen there. It says front side. This guy here as BS, which is backside. So we have two levels. We have the front side and the backside. So what you guys know is that the back sides of legs, they cause these big bounces, and the front side of legs are kind of these greedy levels. So we've kind of talked about this a little bit, but not defined it into a deeper criteria, right? So we've seen already this be the back side of the leg, this be the front side of the leg. As this move develops, and this gets tested and this gets tested, so you have the front side of the leg here gets tested and the back side of the leg here gets tested, you are now going into a deeper range, right? So this front side actually goes here in the move, right? The front side goes here, and the back side of the move goes to here, right? So now or I should say it's right here. So now we're going to leave it there for this example. So yeah, the backside of the leg, which was the front side of the leg in the past, becomes this, and the backside becomes that, right? So now you have the backside and the front side of a leg. So now you have two different types of legs, and we've always had these, and we've always learned about them. It's just defining them, just like this would be the front side of the leg here, and this would be the back side of the leg here, right? It's about identifying what the hold levels mean, because we have different types of hold levels. So we already talked about this. We learned this in the past. So that's fine. We can leave the past in the past. We'll look at more relevant information. But just to know that we have two different holds, and that this is what we've talked about in the past, defining this backside and defining the front side, right? What we called them before, one was a strong level and one was a greedy level, right? So strength versus greed, right? In these moves. So that's how you guys know them, as one is greedy and one is strong. But what we need to do now is further define the criteria in which they make sense, right? So now we can kind of go and we can look at this move here. We can kind of just go and take some of these levels off here and just simply, okay, that's fine. We can leave a few trends here. That's not a big deal. A couple trends aren't going to kill us. So now we can look at this move. Actually, you know what we're going to do? We're going to remove these trends. That's fine. We're going to remove them. They're just going to clutter up the chart. You have Ray, and which one is this one? That's not the right one. I want to leave that one. That one we can remove. This one we can remove. We can remove this, and we can remove this. So when you look at this move, you first start by looking at it and saying, okay, you have a valley here. Okay, so this is like the valley that breaks the move. So you've got a 4-hour valley, and we're going to color code this 4-hour.
Okay, so here's a good example that we can look at. Why this doesn't get held. Like, I want people to, and let me rephrase that. I want people to comment on this chart right here. And I want you guys to tell me what your thoughts are. Like, what's with this hold level? Why doesn't this get hit and held? Like what happens here if you were sitting here on this 4-hour hold level front side? Like what happened? Okay, because look, like it just bleeds right through and you're like, whoa, what about the ladder point? Oh my god, the break level, this and that. What happens? Like what happens here? Let's see how sharp you guys are getting with this stuff. Apologies if you guys hear my son coughing in the background. He's sick right now. Range already tested. Where is it tested? There's a lot we can talk about here. So I like clearly the range is tested. Already 2 tests. Okay, that's another piece. It's already got 2 tests. What else can we add to this? What else could we add to this? Like if we were to further compound this, what else could we add? We can't just say range is tested because the range is tested. It's fine. It's obvious. But there's more that happens than just the range. It's moving up off a strong level. Okay, it's moving up off a strong level. We can add that. What else can we add? Greedy hold hasn't been tested. Okay, the greedy part of the move hasn't been tested. Okay, what else can we add? Already tested and trend break fueling the move. Okay, and the hold is also above the trend. That's a good one. The hold level is above the trend. I like that one. That's a nice piece. Broke trend, yeah. How about ladder points? How about defining where this trade could go based on ladder points? Where does the first test of this actually exist? What about that? Let's start there. Where does the first test exist? How many candles from this point? Where does that first test exist? How many candles over? Interior downtrend broke. Yeah, interior downtrend would have broken too. That's a great one. Yep, that's another piece. Exterior versus interior trend. Yep, that would be another piece. 3 candles over. 1, 2, 3. Bingo. Loon Dyke, bang on. 1, 2, 3. So what happens after 1, 2, 3 candles get broken? What happens next? What the hell is with this thing? What is this? I was talking about from the point it was created where my mouse was. So 3 candles over. Loon had it correct. He got it for us. Bang on. What about this? What's happening here? You guys can't see the cursor. No. Okay, there we go. What's happening here? Sorry. Okay, what's happening here? What's with these 2 candles then? What's happening here? Sorry, guys. Don't worry. Crisis averted. What's happening next? What's it rejecting though? Rejection is true, liquid. What's it rejecting? Inversing the move. It is inversing the move. Super expert hard mode engaged. This is hardcore mode. You make a mistake, you greedy levels. Bingo, Tom's got it. Inside of this is the complete range. Inside of here, there's a smaller interior range. So almost imagine this 4-hour candle here as a backside frontside combination level here. So what's next on the chart? What's the next important thing? So this moment has happened. What's the next most important thing? So you got strong greedy hold. Good, bang, awesome. You know the range is rejecting. So now we know the range is tested. It's hit the greediest level and it's rejecting. What happens next? Ladder down from there. Why ladder down? What's next? Oh, ladder up from there, create a cycle. How about a trend? How about this to this dictates the interior moment trend like this? Aha, interior trend. So now we can create an interior trend. Well, what's next? Break the trend. Then what happens? What happens after you break this trend? What's with this? What is this doing? Go find support for the ladder to create the uptrend. Okay, but what is this candle doing? That's true. We haven't gotten there yet. We have to go down here and you see we have a weekly level here that hasn't hard closed. So that's kind of critical information, right? The kind of that, deep dive, not create an origin. No, not create an origin. While creating an origin might create a breakout in the future, there's something else that's not there yet. Hold the ladder, 1 trend break, please. Yes, amazing. This has tested the interior component. This creates a trend. This now creates what the range has to hold. So if you could imagine, originally the range was from the body to this, which had been tested and tested. The range is now from here to here to here as a ladder. So this actually just indeed tested that range, which would give you a trend like this. So once that trend is created, guess what? It means that ladder is broken. And if that ladder has already tested all parts of the range, guess what happens when this ladder breaks? You've created, I'm not even talking about the bottom side. I'm just dictating what these wicks mean. We're just dissecting what these wicks can represent to understand the event that they can create. So now you have ladder to ladder to ladder. So now you have hold levels in the move, backside, front side, greedier levels inside of a smaller range, creating your first trend, which creates a ladder point. So if you have this, which was created in this moment. So let's stop and talk there for a second. First, let's go back to the beginning of this trade where my mouse cursor is. This is not a ladder point yet. Okay. First, you have to test a level and then the interior components of that level. Well, this is a 4-hour. I'm sure there's 15-minute frontside, backside holds. Test the larger part of the range, which is the entire range. So the range is like this, where my mouse is at first, right? Range is like this. Test that range. Comes up here, test the interior component. Gives you a trend, which shows you a ladder point. Now, instead of the range being the body and the wick as the range has now expanded because it can create a trend. Now your range is represented from here to here, which creates a trend, okay? That trend breaks, this has to hold. This holds, it means that you're going to create a ladder down. This is not a ladder until this trend is created. Trend gets created, point to point. This is now a ladder. This is a trend, this confirms a ladder. Okay, this ladder, which represents the entire range, because remember, the range first started from here, the body, what could be tested as the body of the candle and the wick of the candle, that was at first the range. Once you create this trend, you create a point that could create a ladder point, right? So your range now becomes this, which creates your trend like that. Once that trend breaks, your range is broken. That's why the move happens down here and not here. While this is a nice event there, you were naturally going to move up here because this trend was going to break because this range was already set to break. Once this breaks here, it has nothing to do with this trend. It has to do with this interior range being recreated. So I want you guys to start thinking now less statically about ranges. I don't want you to think, oh, I mark a range here and I mark a range here. No, your range changes. Just like we did in here, right? Just like we went back to this example and we have this whole entire component here where we have the backside, we have the weekly, we have the front side, we have the greedy point, we have even possibly what could be crazy is a ladder point where you retest this exact red line, which is the weekly wick, but it ladders off of this, which is then a ladder point for the future. You see your range changes based on the event that happens. So that's really important to realize here. This range first started, you guys are here and here. As the events unfolded, it created a ladder point which adjusts the range to here. So once this moment happens where you have the wick that creates the trend that confirms the ladder, you have the range defined by the trend, and once the trend breaks, the range is going to get lost and it's going to retest the ladder point at the top of the range, which is naturally already breaking this trend. So the trend break didn't happen here. The trend break happened before that when the range was lost based on this trend. Hopefully that makes sense. It's a lot to chew on. I'm going to just give this a minute, catch up on chat, because that is like beyond critical information. That a range moves and adjusts based on the events that are happening. So much is happening in these few candles that you guys, I don't want to say you're not seeing it, that you've never been shown. So much is happening, and there's so much information to glean off of simple wicks that you could not make sense of before. Maybe you could, but maybe you could make sense of it. You just didn't quite understand some pieces. You have to realize every single component in these charts that unfolds reveals one more piece of the puzzle that gets you to that end path, right? Every single chart on all time frames, constantly. This will be happening all the time. This is cool. So interior trends defines moves inside the range it lives in. Exactly, Liquid. It will define, but you have to be careful because you can say it can define an interior range, but what if this exterior trend was a little higher? Well, it would completely adjust what that interior range can do. So imagine this purple line, instead of it cutting here at when it crosses at 58, imagine it was at 6,000. Well, that completely adjusts what the range can do because it represents a different point of data. So you just have to be careful with that and not get too static. But you are correct in saying an interior trend defines a move inside the range it lives in. This is 100% accurate. You just have to be very cognitive that there's an exterior component and it has an interaction. And if that interior component happens at this timestamp, well, there's a different traverse that it has to get to reach this, a different percentage of a move. If it happens here, that affects the trajectory as well. The traverse is smaller. If it happens out here, that is different as well. Well, if it happens too far out here, like down here, well, could this not just now turn into a cycle instead of a break? Because this could create an origin level in this moment. Sure. If it happened down here, it might be too much of a trajectory to travel, which might close the gap from an even more exterior moment out here that may reject that exterior moment off of this latter point, as to where if it happened here, well, it can supersede this point. So you just have to be very cognitive of the exterior event. When you're talking about an interior event controls the range, this is 100% true. When you're only talking about interior, you have to exclude exterior from there because the exterior moment will be the conclusion of the entirety of the move. So just be cognitive, just be aware of that. When I say cognitive, just cognitively aware in your mind that there's an exterior event and it is altered, which kind of just makes sense. It's not static information. Starting to understand the final hold low better idea now. Yes, they tested the greedy level in a range, created a trend. Now that range is expanded. The range is expanded once the ladder is created because it can create an accumulation to accumulation trend, which will already have been on a more interior component. Like if this was, if you think this is interior, it will have already had, this will already be global to this interior moment, local. Like this would be local accumulation cycle, find the bottom, create 1, 2, 3, create your 4, create your 5. While this may control the range, that would also be a global to the localized accumulation cycle locally. So then even within its own logic, it has a local, global, legacy move independent to these other things that we're talking about. So clarifying. That's so sweet. No cursor. God damn it. So I think you guys know what I'm talking about because I have to click inside the window and it unpauses the video. So I'm not trying to unpause the video. I'm trying to not unpause the video. So what I did is I did this. I just said this right here would be the global moment to interior moments would be an accumulation cycle where this is 1, it creates the knife catch, 2 breaks that, trend goes up. This is already the 3, which creates your 4 break point, which, so that would just be this trend to trend here might look local, but it would be global to its local move. So it may be local to the range, but it's global to the cycle. So there's an interior cycle that's already happening prior to it creating a local range global accumulation, not legacy. Right? So just aware of the different layers in which these boxes fit into each other. Magnet tool, step aside. Khan's got a new bait. When can we trust the wicks? Different exchanges. I'll only ever use BTC USDT perp on Binance. It is leading the industry. So always use that and that alone. Perp USDT only. That controls it all. It used to be XBT, which was BitMEX, which was a legacy chart, and then they changed it to BXBT, but Binance took over in volume.
Exactly what I'm doing here. So we color code this value here. So we know that this is kind of the break of the move and what's going to dictate this thing moving up even further and further and further because the move is already broken and now you're starting to create an origin level or an accumulation cycle. So now you've got to find kind of what's protecting that leg. So in order to start defining these moments, right, front side and back side legs, we always start by marking kind of the leg of the move, right? And then you're going to go into your move and you can see, okay, there's the leg of the move. Where can we find the valleys that protect the move, right? So simply you would have the backside of the leg right here. Right? So this would be the backside. And I'd even, go through time frames here and see if there's, obviously there's going to be nothing on the 4 hour because there's just nothing there. But inside of this, you're going to have the front side and the back side of this leg of the move, right? So this is the break level of the move. And then you're going to have something like this. You're going to have the back side of the move, and you're going to have the front side of the move, right? So the back side of the move will bounce it off, like just like we talked about in the past, right? So and we can even label these. So this would have been the back side of the leg, right? So we're going to color these a different color because we want to backside for BS, and that's over on the right side of the screen here. And we're going to do front side right here, front side of the leg and the back side of the leg. So in the past we talked about what do these do. One is going to try to hold a move through trend, and the other one is going to try to.
I'll pause this since people will need a few seconds to vote here. Just trying to oblige as many people as I can. I prefer today because then I don't have to lose my day off, but that's okay. If I do, I do. It's only 2 hours. I don't work the rest of the day, which is fine. It looks like most people said no, so we'll just continue on.
Bounce the move, right? Like strength versus greed, right? In these moves, strength versus greed. So what you see here when you look at this move and you go back in time and you
we did find that backside front side level that we were talking about.
Take a look at what happens. We know the backside of a leg is going to bounce the move in a big way, right? Like that backside of any move, or the we call them strength and greed levels before. The strength level, which is the stronger part of the move, is going to bounce it hard, as to where the greed level is going to try to hold it. And if it can continue to hold it and break trend, it's going to use that to fuel trend. So in this moment, you hit the backside of the leg, and just as it's supposed to, it causes a huge reaction, right? Like that's what we know the backsides of legs to be, as the strong parts of a move, right? You have the valley that protects the move, so you have the break level here that protects the move, and then you have two sides of the leg, the backside and the front side, right? So you have the backside and the front side of the leg. So the backside of the leg does exactly what it's supposed to. It causes a big bounce, just as the level of strength, as we've talked about in the past. So that's fine. That starts, and then once that's gone, you then have.
I think there's an interesting point to bring up here. I think there's an interesting point with this weekly trend. Weekly level here, that I always kind of use a rule, and I never really tell people about this rule. Some of you may have heard me say this before in passing, but I always kind of talk about the rule of 3 degrees. Now, this is by no means data. Like, I want to make this clear. This is not data that's used in the charts. Rather, it's more like a preference setting, because it actually isn't a truth in the way that the data is conveyed. So I want to make that very clear, that this is more of a preference that I use. 3 degrees of separation. So when we have a level where I look for the most confirmation, and when I was back testing the bot that I was creating back in the day, 3 rules of separation seem to be the highest level of success. Now, I don't agree that it belongs as sort of butterfly effect, but it can help people. So I think it's important to talk about. When you have a level, there's 3 degrees of separation. So in this case, it's a weekly. 3 degrees would be 1st degree daily, 2nd degree 12-hour, 3rd degree 4th, or whichever way you classify that, 3, 2, 1, or 1, 2, 3. Anything beyond 3 layers of separation is not enough of a time frame to confirm that piece. So in this case, if it had been a 4-hour, I would have said that might have been enough to confirm this piece. In this scenario, and it's not enough, let me make something else clear. It's not enough to confirm that I would short the position. It's only enough to allow me to validate along as the move is holding. This is for hard closing, 3 layers of separation. So if you had a 15-minute, it means that only the 5, 3, and 1 could do it. If you had an hourly, it means that the 1 minute can't hard close the hourly. If you have a 4-hour, it means that the 3-minute can't hard close the 4-hour. The 1, 2, 3. It means the 3-minute can't. Yes, correct. The 5-minute can. Again, this is not a hard set rule that I would push forward on people as a part of butterfly effect. It is just something that I've observed for years, that I have noticed when you were talking about a hard closing, Again, back when I was developing the bot, the AI bot, it had the highest success rate out of everything. And it was something that I had played with for a while. It had a higher success rate than using other types of rule sets. However, rule sets don't work because they are too static in charting, because there's always an ulterior variable. For example, if this was a 1 hour hard close, the trend that's created here is going to be very different than a 1 hour hard close in another scenario where the pitch of the actual wicks are completely altered, different angles, different degrees of how they interact. So it cannot be used as a hard rule, but it can be used as kind of like this piece that we keep in the back of our mind as a soft confirming tool.
Bounce just
and I know people always have the question about how do we see hard closes. Separation of 3 degrees has been the most successful way without seeing all the components, because you can see, let me make that clear too. You can see whether this is going to hold or not based on other variables if you go into lower time frames, but it's not always easy to see those. Sometimes we miss them, and this can be an aid, if you would put it, a helpful aid in scenarios where you may have missed something.
As the level of strength, as we've talked about in the past, so that's fine. That starts, and then you know once that's gone, you then have the backside and the front side of this leg, as to where you're in this is already tested, so now you're in the backside of the front of the leg, right? So this is the front of the leg, this is the back of the leg, and this is the backside of the front of the leg. Okay, so this would be kind of like backside front side legs here. So then you can walk through this move, see where the front side gets hit, which is going to try to hold the move down over time through trend, right? Like that's what it's supposed to do, right? It's supposed to hold it through trend like this. It's the greediest entry point, so people are going to continuously enter off this point to try to use it to break trend, right? So this is the front side, back side of the leg. So even as this move develops, and maybe we'll go to a different time frame here. We'll go to just kind of the hourly charts here, and just let it develop a little bit here, maybe. Yeah, that's probably good, right? That's good. Maybe we went a little too far. Maybe let's just go here. So you have hold level on one side, and then you're going to have the kind of the same criteria in here, right? You're going to have kind of front side, back side legs in the space of this move right here, right? So this would be the front side of the leg right here, which is the frontal point, and the back side is here. So kind of like just the greediest point versus the greediest point that's going to back.
And so what I'm doing here is just marking out the larger value. Don't mind this, as this would correctly be the 15-minute backside. But again, having to teach this to people with EIs that are just brand new to butterfly effect, I have to do it a little differently and then step into more advanced concepts in the future. So don't mind the way I'm marking these, as this would be, found on different time frames and things like that. It's okay for this.
Bounce versus the point that's going to try to hold the trend up, right? So in this moment, you did bounce off this, and you had, whatever it is, 4 or 5% here, or whatever the trade is, and that's fine. Maybe it even targeted a greedier level. I'm not too certain, but maybe it targeted this, which is an even greedier level. But regardless, it has the front side and the back side. This right here would be the back side, right? So this is the back side of the leg. Backside. We'll capitalize that. Backside. This would be the front side, right? So then you kind of have something to work with here. You kind of have this, this is going to try to hold through a trend, right? A trend later on. For this example, we're just going to draw it from here to here. That's fine. I'm not sure if this is the accurate trend, but we're just going to, this looks about right in this moment anyways. So you have the front side and the back side of the leg, or your hold levels, just like you'd have your, front side leg here, which actually probably most likely is the backside leg to a smaller front side leg right here. So the backside leg causing a larger bounce in this move relative to the time frame, of course. And we're just going to pause this, actually maybe go to a bigger time frame to see the reaction of what's actually happening here. And then even down here, you'd have front side, backside. Like right here, you'd have we called this the front side because it was the front side of this backside. But now, actually, we need to go and find the greedier entry points, because this would actually be the backside of the leg in this moment. So you'd have this right here, which we're calling it the front side at first because it was the front side of the back leg, right? But now that it's tested, it becomes the back leg, and there's a front leg right here, or right here. The origin point right here is probably a little more accurate, but we can just use this. That's fine. Now we can mark this, and this had already been test it, wherever we had it marked. I believe it was right here. And we can mark this as backside, right? So you always have two sides of a leg here on a move. So we can kind of go here on the move and see what happens. You're always going to have two sides of a leg on the move. See, and you can see it trying to hold right there. It's holding its range. And it might have even went after something even greedier in here. I'm sure there's even an even greedier point in this move that it went after, which would be right here, which would be the final greediest point in the move, the front side of the leg, the kind of the final greediest point, right? So always kind of that push and pull between greed and bouncing, right? The backside and front sides of legs as to where this is the backside that gives it the strength in the move. And this is what
I think it's a good point to talk about. In theory, had this been a backside marked here, now it may have been a backside to this valley back here, but I think on the larger component of this trade, there's different time frames you would have needed to look at. But this would have been a good example to use. A backside here goes after the trend, and the backside is supposed to break the trend. And when that trend doesn't break, simply it's going after the front side, because it's kind of like polarities meet, or opposites, magnets move together and then they fly apart, right? This expected result from here is supposed to break the trend. If it doesn't break the trend, you can assume that backside can no longer hold, right? So you can assume that the levels propping up the ladder point can no longer hold. Once the weaker level, because remember, this trend would have therefore become weaker based on this test. This backside test makes this trend weaker. The weaker level holds, it collapses the move prior to the move even being tested.
To hold through trend in order for it to break up. So then 5069 or whatever it is here kind of becomes.
So that should help people understand where ladders break, and you know, when a move fails and it's just like, well, why didn't the ladder continue? Well, there's a reason why the ladder can't continue. It's not that the ladder isn't continuing, it can't continue. So that's a very important distinction to make right off the start there, is that the expected moment when this gets hit, the data is explaining to you, the data is telling you that when this backside gets hit, this trend can no longer hold. And that's why you see such a collapse of the move right down to the front side of it.
Piece that's holding up this entire leg right here. Like there's nothing left on this leg. If we were to go into this hourly chart, mark out where the move actually starts, it starts right here, and maybe we can see it on the 4 hour as well. The move starts right here, actually on the 4 hour. So we need to find the greediest point inside of that. And then so we're brought to this, and we move forward in time frames. So then we're brought to this region right here. So then we're brought to this region right here, where you have, you know, some kind of front side backside combination, and you know start going deeper into your time frames, and you know, what was the front side in one moment back here is actually the backside, and then you found your greediest point inside this candle, wherever we marked that 3 minute candle up there. You know, you found your greediest point, which is the front side of the leg, which is the piece that's protecting the entire move, right? So then it's kind of like the greediest entry versus the strongest point, but those do interchange as they get interacted with, right? They do interchange, right? So then you have backside of the leg, and maybe we'll switch time frames here to see what happens here. So then, oh, they didn't want to see that. What we want to do is we want to go back to, I believe it was this moment in time. Come on. We want to go back to this moment in time where that 5069 level is hit. You know, we can just see the progression of the move. It's held too. And then even in this moment, you would have had kind of a front side, backside combination in here, right? Like we can even go to the.
And so this would be another good example of that. Oh, stream went offline. Everything okay for everybody? JCap's reporting the stream's off. I think it's just, yeah, okay, it's just unique to JCap. Okay, so this would have been another good example of, I'll give it 1 minute. No issues, all good. Okay, I'll just give it, I'll give it 1 second here. Helps a lot these days, absolutely. All the things that we thought weren't important all of a sudden come up as unique stars, a shooting star once in your life. It's like the university preloads you with 1,000 shooting stars, and in one moment in your life, they each independently fire for one thought that changes everything. It's hilarious. So this would have been another good example of the strength of the trend being dictated by the data. So you know how the backside here is telling you that the trend needs to break, and when the trend can't break, the data is telling you, well, it's going to collapse the interior ladder to go after its stronger point of the move. Its stronger point of the move would have been the front side, which is supposed to be the weaker point of the move. The front side holds, therefore revealing the strength of the trend as weak, goes straight to trend, holds a very high range, breaks trend. So this is another just kind of like a continuing example of how you guys can see the metamorphosis, or the evolution, if you would call it, of how this trend goes from its initial primary existence, very primitive state as it's first created, and it has to create binds and ranges into being strong, evolving to weak, and then becoming strong again and becoming weak based on moments where it's kind of testing back and forth and giving you an expectation to that's onset by the exterior moment. So you guys can see kind of the evolution in its prime form, where it first gets created, and how it's altering how strong or weak it is. And as you see its strength and weakness, you can understand where its target is next. So strength and weakness can often tell you, hey, a target is here or a target is there.
In this moment, you would have had kind of a front side, back side combination in here, right? Like we can even go to the 5 minute here. Look at this.
And I think if I had to kind of cap off one saying to allow it to make sense more, to give it one overarching tagline, I guess you would call it, is I would say the unexpected results in large movement. So if it's expected to break and it doesn't, expect the exact opposite but amplified. Where are we in timestamp? 1410. Okay, so what I mean by that, just quickly so people are following, if this is expected, because the backside was expected to break the trend. The trend doesn't break, therefore representing the original weakness in this. It's kind of like the unexpected thing is going to happen. It's going to give you the exact result, which needs to attack the front side, and that needs to hold to break the move. Because if this can't hold, the trend is too strong to be broken. When the front side holds, the exact opposite becomes true. Instead of it being too strong to hold, it's too weak to hold it down. Instead of it being too strong to hold it down, it's now too weak to hold it down, because the weaker moment superseded its strength. It's like opposites, right? It's like when you try to force two magnets together and they fly apart really fast. When the expected doesn't happen, expect the exact opposite. Hopefully that makes sense.
The 5 minute here.
We're at 14.
Look at this part of the move.
Okay.
And you would have had the same kind of where this is the back side of the move right here, and this is going to try to bounce the move, versus the front side of the leg, which is, which is right here, which is kind of the greediest point, right? The front side of the leg there is the greediest point, and we can get rid of this one. We're done with it. And this would have been the front side of the move that's holding the leg up, right? Just like, right, you'd have the greediest point right here, and then you'd have the greediest point wherever it is in here that gets hit. Could have been an origin level right here. Kind of looks like an origin level, and so forth and so forth. And then you have this right here, which was the back side of the leg, which is causing a stronger bounce. And then you kind of have your final entry point, which is this right here, whatever's in here. This is backside, front side kind of combination of the move. And then so you just use it to move through trend, right? Very, very straightforward, very simple. And what do you have up top, right? So you break trend, and then what do you have up top? You have, maybe we need to go to a bigger time frame here. Kind of just even the same thing, stop. Why is it still playing? Even though it doesn't say play, it says pause and it's still going. Okay, that's fine. It moved past it anyways. Even inside of here, then you would have, where's that 4-hour leg here? Okay, so this is the start of the leg. So it's like, where's the greediest point in here, right? Like it's going to be somewhere inside of this candle right here. We go to the 4-hour and find it. So this is the leg of the move here. So then you have to find the greediest point in here, right? You go inside here and look, and we know this candle pinned right there is the actual leg of the move. So we can start going and we can look, and this range is already tested. So now you're in this range here somewhere. So we can just even go to 5 minute charts and find the front side of the untested leg, which would actually be right here. So this is kind of the moment where, you would have had that same thing, right? Like the backside, which would have been right here, which was already tested right here, and it collapsed, right? And then you would have had the front side of.
Imagine such a small time frame, like a 5 minute backside's already tested. How in the hell does a 5 minute front side hold it? Well, it happens. And when it does, remember what I said, when the unexpected happens, it's like a polar opposite reaction because it's all about the push and pull between strength and weakness, the evolution of data points, the understanding of what they represent on the charts. How the hell could a 5-minute level hold it here? How is this even possible? Well, when it happens, pop goes the weasel, as I say. So that just to continue to emphasize the point of strength and weakness and expected and unexpected results.
That leg. So this is,
as you guys can see, we're just starting the path into a very deep onset of information that we've never been exposed to or talked about. We're just starting the path into understanding where we can make sense of these unexplainable moments.
Important to know, because what some people would say, oh, this is an untested hold level right here. It's not an untested hold level. It was actually a tested backside leg. That protecting the valley being the backside of the leg to that front.
You're correct, JCap. This hasn't been discussed before. This is stuff I could have never possibly gone into this depth when I first released this course.
Side, right? So, and then you have, what becomes the greediest point of entry prior to actually hitting the break of the move, which the break of the move would have been somewhere in this region here. I suppose it would be right here. And actually the break of the
ladder
move
point
is
look at that,
going to be relatively in here, but you're looking for the untested level, right? Like we've already gone through this range in here and we've already tested.
Remember earlier when I said have the higher time frame level? Find the lower piece. Don't hard close the lower piece. 3 degrees of separation. Okay, remember, now we're looking at an hourly chart, hourly frontside hold level, 3 degrees of separation. 1, 2, 3. The 5-minute can confirm. Go back in time a little bit here. 5-minute has not hard closed, as you can see. This can still be a part of the move, just like today when we said, hey, there's a daily frontside right here. Can it go after this hourly? Well, absolutely, of course. And if that's true, could it not also go after this here? Maybe even a safer entry at 416 instead of 550. Well, of course, that's a safer entry. There could possibly be a better entry, but you're seeing the exact same thing that we talked about earlier in this lesson, where you're talking about a daily doesn't hard close. 3 degrees of separation on the 15-minute is the same thing that you're looking at here. 3 degrees of separation as to where this was an hourly hold level, or possibly it was even 15. Regardless, the 5-minute covers all of those, and this can be a point where, hey, it goes after the deeper level, respects the latter point, continues to hold the move. 3 degrees of separation has been completed, and everything is working together.
Being the backside of the leg to that front side, right? So, and then you have, what becomes the greediest point of entry prior to actually hitting the break of the move, which the break of the move would have been somewhere in this region here. I suppose it would be right here. And actually the break of the move is going to be relatively in here, but you're looking for the untested level, right? Like we've already gone through this range in here and we've already tested that range and those levels. You would have been kind of even maybe on a 4-hour time frame. Yeah, so it would have been inside this, the greediest untested point, which is again the front side of the leg. So then we can go here and look, and you can see that level gets hit. Remember, this is the front side of the leg on this move, right? And that's the back side of the leg on that move. Or sorry, the front side versus the front side, right? And
ladder point. How's that for a reaction?
The leg on this move, right? And that's the back side of the leg on that move. Or sorry,
go straight after the greediest point as to where it's supposed to fail. Go straight after the greediest point off this ladder.
The front side versus the front side, right? And so you see it just go straight up and it hits the front side of the leg. The key point being is that
5,100 to 5,900 back in the day when I was looking at this. So how much would that have been? $50 is a full 1%. Is that 20% almost?
That these front sides are typically the greediest points of entry in what becomes prior to breaking a move, right? Like we already know that this is going to break the move. This is going to try to hold it. So this is almost like the perfect short, right? Because you just, flip your chart, and isn't this just like the perfect hold level that's protecting the entire leg of the move? Like that's all
ladder points,
right? It's like the perfect hold level. You've got the leg.
This very much reminds me of 29.2 on the charts. Let's go look at that real quick. Just so we know that these things, they repeat each other. Ladder points at 29.2 look exactly like this right here. Hold level gets hit, starts laddering off. Smaller part of the range down a little lower, right? Smaller part of the range down a little lower, ladder points off 22, extreme reaction up top.
Here, and then even that, you've got kind of the final moments right here. You break this, and this will be a
There's
target
definitely
for a
ways to
lot of
predict
traders
it.
in the future. And then so you just
That
have
would
the
be one
whole
way,
level
I
that's going to
see.
continuously hold the front side of the leg of this move, right? And it's going to use that front side leg to try to, break whatever trend you establish out here. Like that's what this is trying to do. If you hold this for long enough, it's going to end up breaking the trend and continuously going. Otherwise, you're going to go and target, wherever the leg of the move is and break the other way, right? So when we look at this, it's actually quite makes a lot of sense now. Like front side, backside legs, we talked about these as the greediest levels on the chart prior versus the strongest levels, right? So then different time frames, and let's take a look. Okay, we're going to delete all these levels that we don't really need anymore. We're just going to leave that one there because it's still being used, obviously. This one, and we kind of need this one because you know what? Here was the front side of the leg. Here was this range, right? The front side of the leg was in this range. So now we're going to have something else inside this right here. So what happens there? Let's go take a look. Okay. Let's go right here. So you already have the greediest entry point that was hit, right? So then we can kind of go in here and you already have the greediest entry point was hit. So there's nothing left, right? Like we already looked at this as the leg of the move and there's nothing left holding the move up. Like there's nothing. The greediest point was hit. It was used to launch the move, right? So like this being the leg right here, already had the greediest point right here hit, which is the front side of the leg. And then we have the next untested front side of the leg because this one was tested. This front side was not tested. So it kind of becomes like the perfect spot to enter trade, right? You kind of have this moment where it completely goes up. And then what was the moment where, you would look in here and say, okay, how can this thing continue to ladder? So even here you would go and kind of try to find the greediest part to this move, right? Like you would find the greediest point in this move and let's maybe go to a 15-minute, maybe that's too big in time frame. So you would have the backside of the leg right here, which I'm sure bounced the move. And then you would have the front side of the leg, which would be all the way. I would actually I would actually say it's right here because it can't go any lower than this because this is already a tested level. So it can't really go any lower than this. If it goes lower than this, it's kind of broken the move. So kind of the moment it touches this, the move is kind of dead in the water, right? Because this is already breaking the leg. Like it can't really lose this range at this point, right? Like it has to kind of range define somewhere, even here, I'm sure in 1 minute time frames, it has a hold level here, which is protecting this piece, which is already testing, whatever it's testing back here, whatever little 1 minute greedy level is in here. I'm sure there's some little valley in here that's the greediest point. Yeah, it's the top of the valley. There's the greediest point, and so be it. It hits it twice, and then that's like the perfect spot to enter the front side of like the greediest point, kind of the quote unquote lowest point it could ever be, right? Then you'd have the same thing here. It's like the lowest point of the move. And then you'd have the same thing as it goes up. You'd have this right here as the lowest point of the move. It's already kind of creating this perpetual ladder for itself. So these are all levels that they, once one collapses, they all, take away the first domino and the whole house of cards falls down, right? Like this is already gone. This is already gone. This is already gone. This is already gone, right? We've already tested that. So let's actually find the next greediest level. Like where is it, right? So then you would look in, even in this range right here, and maybe we'll take our replayer tool back to this range before we see what happened in the moment, because I'm actually not quite sure. So we'd have to go in here and see where the leg of the move starts, right? Go into this moment and say, okay, the leg of this move is kind of right in this range here, actually. Kind of right in this range because it looks like this has already been tested, right? Like this break level's already been tested. So if the break level's already been tested, there has to be something between this and this. And if not those two, that and this. So something in this range of 3 candles, this to this or this to this, right? So then we can even go in here and look. It really doesn't look like there's anything. The backside of this leg was actually already tested, you see. So now we actually have to look for the front side of this leg. Now we can kind of go in here and dive into time frames and say, okay, so this backside's tested, making this the backside, which makes this the front side. And you may get super greedy and go here. I really doubt it. I don't think so. I think, this is the backside of this leg and the front side of the leg here. And we keep adjusting this term, the backside to the front side, because
you don't always have to take the trade MD. Like I think you have to always define kind of your risk and what makes sense in that moment. I think when you're looking at a level that's constantly tested, you either have to identify if it can correctly ladder still and what allows it to ladder, or sorry for my kids screaming. It's breakfast time and they're calling for data, which is not happening right now. You could look for a ladder point to see the justification of why it could hold, or you could just simply not take the trade. There's always that part of trading where even though sometimes a level may hold a move, it doesn't mean you have to take every single trade. Taking the smart trades that are safe, that reduce risk over time, compounds a career of wealth. And you're not talking about being rich anymore. You're talking about being wealthy, which is, you know, a lot more than rich. You're talking about a different level of success when you start compounding smart moments. It's you know, often the difference between people who have high volatility in their account versus, and you can be a profitable trader with high volatility, is just, I feel personally having lower volatility with a more expected result will make your career last longer and be more fulfilled, less stressful. A lot of factors that you may want to have in a career in day trading. Taking safer levels with less risk, I think, is, you know, the key piece there. But you can definitely justify hold levels being hit multiple times based on ladder points, and there's other spots where you can see that. It's just, you know, it's why Blueprint is so valuable, because it talks about the logic in the way that we execute these layers, or execute these trades, the execution layer and procedural analysis. So, you know, sometimes a level can get hit multiple times. It's just, you know, very important to know when it's right to take that level.
What was once the backside, or sorry, what was once the front side will be something else's backside, right? You know, has this moment in time been tested? Because now you have two legs, and you're already in this. Where did we leave off here? We moved up to that level. We came here. We tested this. We tested up. Okay, so we already had.
Yeah, so if you hadn't noticed in the past, I look at trades, I'm like, yeah, it looks good. I'm not taking it constantly, but realize I'm also trading with 100x at $2,500. So sometimes when I get into one trade, it can lead to, you know, one day's work sometimes can lead to 50 grand or 75 grand, or even crazy days, $100,000. So, you know, imagine if you make $100,000 on a trade, if you did it 3 times a year, your income would be, well, you wouldn't be rich, but you'd have a very healthy income. You'd be making more than a doctor at that point. So 3 trades a year on the right leverage at the right moment has become a pillar for me. And you know, as you get better and better in trading, and well, okay, maybe not a plastic surgeon, but some doctors, maybe like a GP, will make 200,000 a year. Anyways, different doctors, different salaries, not important for today. As you get better in your career, you find yourself becoming more and more picky. So this is something that I have noticed in people who are in this game for longer and longer and longer. They would rather get into safe positions that can turn into long-term investments. Not saying to invest, use your TA. I say an investment, and I could mean like a 3-day trade, because for me, an investment is like a 3-day trade. Okay, so like I don't invest. So I'm talking about, you know, replace that word investment with a position trade, of the shortest time frame position trade you can imagine. So, you know, sometimes, and I see this with some of my best traders who are making amazing incomes all the time. You can have 10 levels hit and it's just like, oh cool, 10 levels just hit. I marked all 10 of them. Doesn't matter. I don't want to take it. Risk doesn't make sense. They just don't care. People will often see that's my approach on Twitch and on all these other platforms. I just don't care, because when you trade with a certain amount of leverage, it's just like, oh, okay, well, you just, you know, make sure you aren't being stupid, taking the smart trades, and it's amazing how fast that compounds. So I think there's kind of a line there that everybody passes, and I don't think it's a one-to-one rule where you have to take less trades as you get better. I think everybody makes that decision on what type of trader they want to be. But I can say a lot of the really good traders that I work with don't care about missing trades and are very picky about their entries, because they're starting to up their leverage into a bit bigger amounts, and they want that kind of just reliability of success, because it can be planned. And then when you have that reliability of success, you can say, oh, I can make $4 grand this week if I just do a few simple things. And then they just wait for those moments, and it doesn't become this thing where you force results. But and then there's some traders who love the action and they just want to be in it every single day. I think everybody makes that decision. So I think it's a great comment. Just think that there's a path of discovery there for each trader, but don't be afraid to miss levels. Like if you've identified and it's like, oh, it's a great level, but it's super risky. Yeah, that's okay. There's another great level in the future. You don't have to take it. If it's increasing risk, reduce the likeliness that you'll every little bit of risk that it increases, reduce the likeliness that you'll actually enter the trade, regardless of the outcome.
All these levels collapse down. I thought we had already done this part of the chart. Oh, it's okay. We'll go through it again anyway. So anyways, again, here's that piece of the leg. Everything else is already broken. So like it has to move up off this, right? And then the same thing on this side. You'd have the front side and back side of legs, right? Like you go to the 15-minute charts here, and you'd have back side of the leg here, which you can see is already tested, which means you're going after the back front side combination here, which is going to be something like this, right? The greediest points versus like even here, something like this. So this is already tested, so that's gone. You can see if it's going to hold its range. That's fine. But then
I also would say this as well to further that comment. I would also say there's another game that gets played. I would say there's two games on the charts that gets played. I would say there's the scalp game that gets played when things are very obvious, right? Like, and I'm going to talk about very obvious for a minute. You just go to a 15-minute level and say, what the hell is really obvious here, right? Like, hell, you could even go to like an hourly or a 4-hour right now. You can even just go to like the highest time frame that could be possible and just start from there. There's kind of like here's a 4-hour body right here. This is a pretty greedy point. This becomes pretty obvious. That doesn't mean it's and here's like another one right here. This is another perfect point here. It's a ladder point 46.8. That's what WD's been talking about. He took. There's a game that gets played inside of there that you have to decide as well. Like there's a scalp and a position and a swing game. Like they're all three independently separate types of games that are played. Like you may want to wait because the next 4-hour range below this is here, which is already holding up the move. So if it's already holding up the move, it's going after the next part of the range. And then so the next piece would be here. You may play this, and when this breaks, you may just wait till down here. Like that's its own game separately. And then as you get into smaller and smaller time frames, you're getting into different parts of the moves. Like even go to even like a 5-minute time frame. Forget 15s. Go to like a 5. You go to a 5-minute time frame where you can just say like, I don't know. Here's a perfect example right here. Look at this valley and look at the short opportunity. It's so easy. Look at how fast it goes down and look at the short opportunity. And then there's just like a little scalp game even to this that can be played right here. There's just even like a little, there's a scalp game that gets played in between ranges. So like identifying where the range exists, I think is where a good point to make those definitions become. Because there's nothing wrong with trading like 50 trades a day. Now, well, that's a little bit of an overkill exaggeration, but there's nothing wrong with taking like 5, 6, 7 trades a day and being highly active as a trader. It's just, I think the more important definition there becomes understanding the potential of the move. Like it's called profit caps. So we'll get into that later in the mentorship, but understanding your profit caps can define how many trades you get into, because there is simply just like pretty straightforward stuff that gets hit. Like move hits here, hits a level, ladders, creates a 5-minute hold. A very simple trade. 5-minute hold, right to the 5-minute hold, like a 5-minute to the 5-minute, right? Like this is about as simple as it gets. Like it's not, and then you've got a good profit there. And this is its own game in its own, right? And then this 5-minute here, and it's like, okay, well, this never got hit, so you're going after this, and that gets hit, and fine, right? So I just think profit caps will help a lot of people when we get to that point.
And it goes after the backside frontside combination here, right? Backside right here, and quite possibly something even lower time frame. Yeah, it's right there. So backside, front side, right? So you have this kind of combination backside, front side levels here. And it simply hits trend down the backside level and pulls back, right? So I think at this point, we are hit this. Yep, this one's gone. And you'd have the same thing back here, right? Like this would have been backside right here. It's tested, which means this is kind of like the range combination here versus here, right? So you've got kind of this range combination here. You've already tested this. So you might as well not even target this because this is already tested. You might as well not even target that. So then you kind of have this range right here. See what happens here. 5-minute charts. Boy, these things take time. Well, we're getting pretty close. So there's the first range test, right? Back up to trend. And then this is gone. So we can basically already destroy this, right? And there's a test right there. You can see it off of this right here. There's some kind of front side, backside combination that's testing here against trend, right? So that's fine. We know it's there. We're going to go to a different time frame because this is taking a little too long on the 5-minute charts. Then we kind of have like the last untested piece of this chart, right? You have the last untested piece of this chart. And then inside here, you're going to have another, again, this is some kind of range combination inside of this, right? Like you're going to have some kind of backside, front side range combination, like right here, right? Like some kind of combination where it's the backside, front side, that's protecting the entirety of the leg of the move. So this is continue laddering as long as it's off the front side of the leg, right? Like it can continue to ladder off this as long as it doesn't break its range, right? We have trend and trend pushes up. So you break trend, that, very straightforward. You break trend and you go probably to your range bind up here, right? Like there's going to be a range bind in this region here. Same kind of range bind, and then it goes to that point there. Okay, so we did get to this point in the chart. So this is what we were looking at. We did break that trend, and we were looking at, this was kind of the final level. So that's where we left it off. So we can actually go back here and we can go to our 5-minute charts, and you can see where you kind of have this, last untested level, because we had deleted all these ones because this one was tested, and then, further up was tested and so forth. And so we had kind of this little, 1-minute level in here. So if this gets lost and we can't hold this, the move is collapsing because we know we already had pre-broken everything else down. Like we already deleted all these levels. Like that's what we did earlier. We had this level here, and that was already tested. And then we had range bind right here, right? And this was tested. So this was tested. So kind of like when you lose this one, there's no levels left, right? There's actually nothing left on the chart. So that if you can't hold this, and then the final moment in this would have been whatever's over top of this. I suppose you could move this to here, right? Something relatively here. Like you touch this again and you're going to be in trouble. Yeah, so you touch it again, you lose it, you regain it, but at that point the move is already broken, right? Like you've already collapsed the ranges on the move. That leaves us with what's next. Like this has already been tested here, right? That 5069 was already tested. So what's our next one here? 4600. That was like the next untested non-broken level. There's possibly something right here. You could make a case for this right here, but this would be pretty thin. You could make a case for one of these two levels. It would be pretty thin though. If anything, I'd go for the greedier attack. So if anything, you could make a case for this level, and possibly 5006 ends up being a point where, some injection comes in, but I don't know if I would trade that. Like it's pretty tough. Like, yeah, so fine. You have a little bit of time here where you have some, vertical movement, but it's just so thin. Like I would really be targeting the next untested level here. This, whatever this 4674 level is, like it's pretty perfect, right? Like it's the next kind of untested range bind of this move. So then, we can even kind of just get rid of this trend. I don't really think we need this trend anymore. I'm not quite sure what this is. It looks like this is that other trend there. 46 and 43 are some levels here that we would look at. Let's just maybe move this up in time frame. Maybe a 1-minute candle might take a little too long. We might be here all day. If TradingView will allow it, we will like to go to the 5-minute charts here.
Data point unavailable. Never unavailable when you know what you're doing.
If TradingView will let us, and you never know with these things. Okay. It skipped through the move. Well, that's okay. We're here anyways now. So what we would have to do here is take a look at what actually happened, because we know we tested this and this was gone. So did we actually miss something? Like, was this an error in our charts? Like what happened here? Hopefully we can go back on the 3 minutes long enough. So you've got the backside of the leg here. You've got possibly this as the greediest point. Like there's 1-minute stuff in here, right? Like there's like 1-minute candles in here and stuff like that. And as the move is developing, I suppose you could take a look and see how it's moving and developing, but I would feel a lot safer taking those trades there. But yeah, I suppose you could go in the moment and see how that move is developing. And then, if it hits one of these extreme levels, then fine, so be it, it does. But 46 looked pretty good in my opinion, where we originally had it marked, which was believe it was this right here, 46.34 or something of the sort. It was something in here, which is perfectly fine. This looked pretty good, and so fine. It holds the move up, doesn't close a necessary time frame. A tough trade to take because this is a liquidation on a contract trade, but again, it's the same token. There is no bottom to the coin at this point because we don't have a trend yet developed. So, taking any trade at that point, like if I was targeting anything, I would target this. I don't think I'd be trying to take big trades against this level here. If anything, I would have been targeting this. And if it doesn't get filled, I don't go in the trade because quite simply, where it's going from here is kind of like this is the level it's targeting. You can see it's quite clear that it's targeting that level. Just volatility falls through and then it needs to get back over top of it. So that's fine. It went after the backside of a leg, but it's a pretty gnarly knife catch. Let's put it that way, right? So let's continue on this move. You're going to have the same thing on the top side of the move too. Like if you look at the top side of the move and you say this is the leg that protects the move, you still have a range bind on this.
Just to kind of drive a point home here, you see the same thing happening relative to the time frame. 15-minute level created, 15-minute hold created, 15 minutes. You're just getting that same trail of things.
Even more interior to the move. Like even if you go to this point here, you still
hold.
have. Maybe we can use a bigger time frame here. Maybe we'll see if there's anything notable on the 4 hours. So we know that this is the leg of the move here, which means that it has to be somewhere between these 2 points, the range bind, right? So we know that there's like a 1 hour right here. That's pretty decent. Do we have a front side, back side here? So we have this, and the front side of the leg here would just be the valley that's protecting it. So where is that point here? That's the 4 hour candle here. So it has to be within this range here, between this point and that point there. So then you'd have something like this. This is already tested, right? Like this is, already tested. Where was that point? The first original point right there. So you'd have something like that and like this. The front side and the back side of this break level right here. And,
Oh, are you guys having problems with the video? You need to refresh? I'll give it a second here. Yep, go ahead, refresh, guys. There's nothing too new being talked about right here anyway, so I haven't been making too many comments. I've been watching, but there's not too many comments. We've gone over everything in such great depth today. So, okay, I'll continue.
You'd have the same thing back here. You'd have a backside range and a front side range right here. Backside and a front side that protects this valley back here. You could have something even greedier in there. We could dissect every candle. We don't need to. You can go to every small little time frame and see where the backside and front side ranges. So, if you're here in the moment, that would be so you have to mark the top of the candle to find it, which would be here. So it's the greediest level inside of that. So, you'd have your range right here somewhere. Like this is the greediest level before breaking the move. In this case, you broke the move. So, you're going to move up. Very straightforward and simple. You broke the move, you're going to move up, right? Exactly what break levels represent and exactly where holds and breaks make a difference in the chart, in the architecture going forward, right? So even here in this moment, you'd have the backside, front side range, right? So assumingly this hit the backside range. And front side range breaks the move, right? Same thing we saw here. The signs that a move is breaking, right? And so forth and so forth, right? So you always have two ranges to a candle, right? Like looking on this side of the chart, let's do it like that. Let's look on this side because all we did was look at kind of the targets in one direction. So here you'd have backside range versus the front side range, right? And go to this on the hourly and see where the leg of the move is. The leg of the move is down here. So, you're going to have a duality of ranges here. You're going to have a backside, front side, and then you're going to have one on the back of the leg and one on the front of the leg. Backside range and your front side range, right? So you have the backside range and the front side range.